Hello, I'm Tyler Rudek, Chief Investment Officer at Boyum Wealth Architects. The Federal Reserve continues to be a focus for investors, especially as leadership and policy direction evolve. In this week's video, I'll walk through three charts that help put recent changes at the Fed into perspective and what they mean for long-term investors. Chart one looks at economic growth and Fed shares over time. The Fed recently welcomed Kevin Warsh as the 17th ever chairman of the Federal Reserve. The U.S. economy has continued to grow across many different Fed chairs and policy environments. Each leader has navigated unique challenges, from inflation and financial crises to periods of stability and growth. While the Fed plays an important role, long-term outcomes are ultimately driven by broader economic forces beyond any single policymaker. Next, we look at productivity growth by decade. Productivity growth has historically driven long-term economic expansion with notable gains during the technology boom of the 1990s. Today, artificial intelligence is a key focus with potential boosts to productivity over time. Higher productivity supports stronger economic growth, rising wages, and can help ease inflation pressures over the long run. Last up, we have the Fed's balance sheet. The Fed's balance sheet expanded significantly during periods of crisis and remains elevated today. Policymakers have begun reducing it, a process known as quantitative tightening. Changes in the balance sheet can influence financial conditions, including interest rates, borrowing costs, and market liquidity. And that is it for this week. The bottom line is that while changes in Fed leadership and policy can influence markets in the short term, they rarely alter the long-term drivers of investment returns. Staying focused on fundamentals like productivity, economic growth, and maintaining a disciplined and diversified approach remains the best way to achieve long-term financial goals. As always, please reach out if you have any questions, and thank you for watching.